Well, guys, as we know, when the biggest articles on the internet right now are all about markets crashing, we need to be paying attention to the data and the flows. And in today's video, we've got the latest dark pool activity, options flows, and of course, key levels. But it really isn't just about the US 500 and market indices. It's also about alternative assets. We saw gold get absolutely destroyed over the last few weeks, but bounce off that key zone we spoke about in our weekend video. And it's starting to look better and better as the markets start to buy it up. But could this have big ramifications to other markets? What about China? Are we seeing a key level being reached that we've waited for some time? And could this be the end of the US dollar? It's been a huge rise all the way through the months of October and November, but have we just peaked? Today, we'll talk about stocks, commodities, and cryptos as we break down the latest information that you need to know about the markets right now. Join us. This will be a great one. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be discussing the latest macro, lead indicators, and of course, the hottest charts together. It was a bit of a mixed bag for Monday, but there were some leaders, such as Tesla, and of course, some big falls, such as PLTR. After such a great run, is it over for that stock? Well, let's take a look at what's actually happening underneath the hood. For a little while now, we've actually seen big tech stocks underperforming. And you may not know this unless you look at charts like these ones, XLK versus the SPY. It's what we call a long-short ratio, and it's showing us a very interesting story that most of us are aware if you've been watching the channel for a while. If you haven't, make sure to subscribe because this is what changes the game for you as an investor, swing trader, and day trader. You may notice we've failed to make a higher high, and initially you'll say, well, that means that the markets are bearish, yeah, everything looks disgusting. Well, yes, while technology was pretty much absolutely blitzing through 2023, through 2024, as we enter into a mid/late cycle of the bull market, we tend to see other areas and other sectors do better. This is the natural harmony of a market and exactly what you would expect to see. But it doesn't mean instantaneously it's bearish. One of the most important things to do is to step back from the data and have a look and say, what about the top-down approach? Do we see some of the stress warning signs on the markets? So while fear indicators might have you believing that everything's terrible, take a look here at the weekly bankruptcy filings. You may have noticed it doesn't look very bad. In fact, it's dropped all the way back down to not historical lows, but certainly down there. We've also seen some other information that helps us to kind of gain confidence in this current rally right now, and that is that we've seen a strength in one of our favorite sectors of the year, which has been regional banks and financials. Now, when you see this, it doesn't usually mean that a crash is just around the corner. And this lines up with a lot of the data we've been looking at, which has 3-month and 6-month in particular, and even 12-month data, showing that there is generally speaking a buy the dip style nature to this market right now. Now, could everything change with a click of a finger? Of course it could, and we need to be paying attention to that. But so far, so good. Bankruptcies down, financials getting flows into them, and consumer discretionary also doing well. Now, you may have noticed we mentioned the big run on the US dollar. You can see here at All Star Charts, they've got a nice seasonality chart for the US dollar. And you may notice something if you're eagle-eyed straight away, which is the election years tend to perform pretty poorly when it comes to the US dollar after the election itself. Now, you may have noticed we've got that huge rise. We've now hit basically the 2023 highs, and we may have found resistance. Could this be the end of the current dollar run? Well, it's certainly seasonality-wise a good look. And of course, this means that we now need to find technical reasons to potentially see shorts in the dollar. And what could that mean for some of the other markets? Now, as we mentioned on our weekend video, we talked about how retail traders get trapped by Wall Street all the time. We already know that post-US election, everyone was feeling a lot of FOMO. Crypto markets went up. Fantastic. We were on those runs. But at the same time, we also saw regional banks go up, which is also another one we thought. But everything was buying up. And what it leads into is short-term FOMO, particularly in the options markets. Now, we always do Monday open streams. We do have a private community. You can join in the links in the pinned comment down below for our Black Friday sale. But overall, we always look at what the retail traders are doing, what we are doing, because what most of us are doing is usually the wrong thing. And you'll notice everyone was buying heavily into the markets basically straight after the election. Now, as soon as that occurred, the big move happened, went up for like 1 or 2 days, and then started to dive over. This is what we call a trap, and of course, Wall Street said it pretty well. Some notable ones were rallies off the kind of sell back in 2022, and that's when retail traders got absolutely left holding the bags at that period of time. And of course, it took a while for them to get it back. But is this any different? Well, let's take a look at why we might have seen selling come across. Basically, usually you have around 31% of respondents completely confused about markets. This is what we call the neutral level. And we saw that change after the US election. As soon as the US election was had, we've noticed that everyone went on the bull side and the bears barely changed. Now, this leads into potentially short-term traps. And of course, it's what we ended up seeing the market do, which is selling off about 120 points on the S&P. Now, when we move over to the bull-bear spread, nothing really to be concerned about here. And again, as we've mentioned several times, as per these charts as well, we're not really too concerned about this market looking really horribly, right now. Basically, we have this level, which is the 58.80 zone, and we have the 58.20 zone to contend with for market bulls and bears. And this is where we expect market bulls to try to buy back up. So at the time of this recording, where are we? We've managed to get back above 5,900. And as you may have remembered in our weekend video, this was exactly the level we suspected we would hold above. Why? We had a huge put wall at 59, and there were quite a few large options betting on the markets trying to get back above that level. So what's going to do well moving forward? Well, if we're trading similar to 2020, 2016, and now 2024 election years, you've got to kind of look at financials, materials, and of course the small caps in general. These have been what has performed well in the past, and it does look like flows are still moving into it. As we've already talked about on the channel together, we see here that the differential between the spreads, that is the differential between the small caps and the large caps, is one of the widest we've ever had, post-COVID, of course, becoming more of the norm. But this is actually pretty wild. And that's why we've seen small caps and mid caps doing okay over the recent months. Particularly mid caps have started to see quite a lot of transactions going back through them. The election pump is a real thing. The election inauguration dump is realistically a real thing. So, of course, we'll be focusing on that over the next coming months, along with the Christmas Santa rally and whether we're going to see it in 2024. But this is just one that we've had quite a few times on the show, showing you the Russell 2000 versus, of course, election pumps. Now, what about the 3-month forward returns? Well, remember, no recession. At the moment, that's a check mark. 2 weeks prior, plus general structure looking pretty good into the US elections. That's been pretty nice as well. And this has led into, of course, a 3-month read and our own calculation showing that even by the end of the year, it's possible we could be at 6,200 on these markets. And you might say, well, how is this possible? Well, look at generalized bull markets. If we look at a general bull market, you'll notice that we're trading right in the middle of all of them pretty much across the board. And this means that we're on track for a pretty normal style return. Now, does it mean there's no pullbacks anymore? Of course not. But you do need to be on the outlook for probably 2025 bringing a bigger sell, and that being really the more questionable year. 2024, so far, it looks like things continue to look very strong. Remember, 10 of the last 11 months are up, and I'll show you that stat in the next video. It's not very bad, let's just say that. Gold moving average deviation. We already know that we've loved gold on the channel. Of course, we've been talking about $3,000 an ounce since $1,800 an ounce, and 2024 has been a fantastic year for this metal. We talked about how it was coming down to a buy zone, and it looks like Wall Street is bidding it. You'll notice in a moment that there's some dark pool liquidity coming through in some of the metals as well. Bitcoin, we know the read here. Go back and watch one of our other videos if you're interested. But interestingly, also Ethereum, as we've already seen in the move, getting huge inflows for the first time pretty much since the launch of the ETFs. Take a look at all these sells, and then all of a sudden it switches just after the election. Obviously, we've been discussing Ethereum. We got that ride, and it led into a profit target. Now let's talk about the kind of bad, and we will do a deep dive on this in our next video. MSTR has large transactions on it. And in fact, the second largest transaction has just gone through MSTR, and we also saw a whole bunch of dark pool activity on the 2 times inverse MSTR ETF. Now, could this mean that there's a short-term sell in this particular stock that's most likely overvalued? Well, I'll let you come up with those conclusions, but you can see here the cluster of huge trades up in the highs. Very interesting to look at. We also noticed that SMCI on the weekend video got its largest transaction ever. Loose lips, well, certainly could have been, because as we know, boom goes the dynamite. Massive, big, huge move. This is a very risky stock. We know there's all sorts of financial issues with it, but it just shows you that when big transactions come through, they often get the direction correct. So this brings us to, of course, China, Yang. We're seeing big transactions up at the highs here for a bear ETF. This basically means that we're probably seeing a profit target taken, and that just so happens to be in line with the level that we've been looking at. At the same time that you're looking at China, you should also be looking at metals. So what have we had? Well, silver has got massive transactions in it as well. Exactly what we suspected on the Monday open. Silver, one of the best performing asset classes of the day. And yeah, we've liked the zone. We'll go through that in just a moment together. And then comes treasuries. While it might not be time just yet, I thought I'd alert you guys. I said I would. There seems to be a lot of clustering down here at these lows. And while, of course, the news media is telling you that everyone's shorting treasuries under the sun, it doesn't look like that when you look at the amount of transactions. We don't know it yet, but of course we are watching closely. Still in earnings season, guys, so make sure to pay attention to them. Here are the latest. So let's now take a look at flows. And of course, gold performing stocks and metals were the best of the last 24 hours. No surprises on gold. It's been getting absolutely hammered over the last 2 to 3 weeks, and now it seems to have a little bit of a bounce. We also saw the usual suspects down in the lows, although we did have a little bit of weakness in regional banks. When we take a look at the last 5 days, surprisingly in some ways, energy stocks absolutely going against, of course, oil, and gold and utilities finding their best two now on the 5-day run. So let's take a look at the S&P 500. Have we found the first buy pressure? Well, we already know this is one of our two main key levels. The 20-day moving average and the 50-day moving average should be paid attention to, we believe, at this particular point. This is the 20. We see a lot of bounces, especially more aggressive runs come off this. And you may notice now we have a gap down. So what if we hover around this point for a little while, then gap up? Well, what would that be? An island reversal. So of course, look for that. We did see a little bit of improvement on the advanced decline line, which is quite nice. And things started to improve overall. When we look at the US futures, you can see here that we have a sell-off. We obviously have a roll reversal zone, and we're not quite down to things like the 61.8 fib. But if we were, it's 58.20. And I want to remember that level as we go through here with the options, because really this comes down to the options more than anything else. Notice something here about the next 24 hours and even the next 48 hours. Well, you may see 58.30 and of course 58.50 as huge put walls. Now, this is going to help the market to sustain above these levels. And as we mentioned in the last video where we saw 5,900 as the major put wall, the market sneakily got just above that, so they didn't really need to pay it out too much. But these are the key levels, and it kind of puts a floor in the market for now. It's saying, you know what, even if we do see a sell-off over the next 24 hours, it's not going to be probably that bad. It could get bad if it gets underneath these zones, but it seems unlikely at this stage. And 6,000 remains the key level for the bulls. Of course, we get through 6,000, we close above. That's going to enter into super positive gamma and start the flows going again. So at the moment, the market is having a bit of a breather. Somewhere between 58.20, 58.30 and 6,000 is where we kind of suspect it might be sitting for maybe the next week, maybe even next 2 weeks. And this is perfectly normal. We had a huge move. We need to digest it. That tends to be what happens. What about Tesla? Well, it didn't hold above 350, but the call walls did move quite a lot over the next week. 330 in particular is what Tesla bulls will want to hold above, and this will become now the big strike of the week. We're currently at 339, and that was a big move thanks to, of course, the robo-taxi news that was coming out about it getting deregulated and kind of easier to get through with robo-taxis being approved. What about NVDA? 150 still is the massive call wall, and this is still the best semiconductor stock on the markets. Earnings coming for it, so of course everyone's waiting for that, and the market is starting to upgrade itself leading into earnings. So will they be correct? We'll talk about that more in depth soon. Some good news for the markets. Well, that is of course the US 10Y. We've argued this is the most important chart right now to be watching. US 10Y is showing us that we're respecting this resistance. And this is good news for people that are wanting to buy into the market. So obviously if we see the US 10Y drop a little bit, it's kind of showing, you know, we're not getting this rampant kind of craziness going back onto that market. And more importantly, we're probably starting to see the US dollar probably turning around and potentially coming back down. Now, we did mention XLK versus SPY. I just want to mention this again because really what this is showing us is that we have technology stocks effectively declining against the SPY, or at least just holding their own in recent months. We don't really see outperformance anymore in tech. And this is perfectly normal as we enter through the bull cycle. Now, we would still suspect that technology will do well, but it's not going to go ballistic versus the market anymore. And that's because the ballistic move was over here, and now we're playing catch up in 2024. If you missed some of the best instruments and best sectors to be in, then of course subscribe to the channel, because charts like this really show you that you don't want to always just be chasing what retail sees as the best stock, whether that's be Amazon, Google, Microsoft, Meta, or anything else. There are times to own it, and there are times to, of course, rotate into other things. Speaking of which, the American consumer still looks very strong on the charts, as you guys know, and home builders are still holding above those lows down here. So no real causes of concern here in the markets in terms of some of the lead indicators. Now, have we seen the highs for the US dollar? Well, you will notice that back in 2023, we saw the dollar up at this point. The US 10Y is obviously dropping. Yields very important to the dollar. And we are starting to see potentially a bit of sell-off here. Now, this is good news for people that are in potentially crypto, people that are in gold, silver, and all of those types of metals, and also potentially good news for the metals themselves. So when we move over to copper, you'll notice here that we're holding these level lows, and we're starting to see a little bit of a turn towards the upside. Now, this marks a very key point because as we know, Chinese stocks also have come down to the key zone, and we'll be paying attention to them and obviously looking at these key levels over the next couple of weeks and days, because right now, Chinese stocks out of focus. No one likes them. They're not in the press, or if they are, it's all for the bad reasons. And we're starting to see a little bit of an uptick at this correct zone. 19,850 to 900 remains kind of that bullish, more bullish level. And what we've seen so far is position-based traders and investors starting to potentially say, you know what? I don't mind this price on Chinese stocks. I know that the Chinese government's going to do a lot of stimulus in the future. And, you know, I'm comfortable that even if there's downside, maybe I can wear those risks. Again, proceed with caution. You guys need to make your own decisions there. Iron ore also making a little bit of a higher high in terms of trying to get back above some of the previous losses in the last couple of days. I'll set a little alert here at 770. But as we've talked about, iron ore, very important metal to be coming with the Chinese stocks. They really go hand in hand there. So is this all good for gold? Well, it's a great level. We love this level. Very, very nice level for gold. Obviously bouncing off it, and gold looks okay on the charts. We've written up here 26.25 as being a bullish level, but I want to focus on silver. This is what we were doing for the live stream for Monday, and the reason we were is because we just loved it. I love this. This chart was awesome. Not very often I see awesome charts where I'm just like, you know what, that's really sweet. But you'll notice I suddenly switched to focusing fully on silver. And the reason is because that's how flow works, guys. You've got to focus on where the market action is. The unique thing about our community, what you guys do, what you understand that most retail traders don't, is that it's all about focusing on movements through the markets. XLK versus SPY should show you that straight away and show you why this is where it is the place to be. But silver had some beautiful technicals on it. This was a mixture of things from our day trading masterclass, from our advanced masterclass, and more importantly, replicable. And you can see here that that was no joke. That was a decent move in silver towards the upside. In fact, on the day, we now saw a movement of 3%. You might say, well, that's not much. I see that in crypto all the time. It's not so much the percentage, it's about the ratio. And remember, in trading, that's what everything is. So we're focused on now this pretty strongly. Obviously, we're in a supply area at the moment, but I think the signs are there that markets are trying to buy this particular precious metal up. And if silver continues to find bid here, that's going to be really strong. We're going to focus on it over the next week. And really all these lines are is just showing a lot of confluence in the zone. It's not squiggle lines for no reason, that's for sure. What about US oil? Well, we mentioned on the weekend video that it's confusion. It may look more negative than positive at these levels with the close. Well, as we always like to do, patience, react, don't predict. The market in this case actually found a pretty strong reaction towards the upside. If it does continue to break towards the upside, that's most likely trapped shorters. And we can probably then definitively more say, okay, well, the bulls are back in oil. For now, though, still confusion. waiting for this area to see day traders buy back in. But first, this is actually a pretty positive sign. A lot of trapping going on here down the lows. I could see a lot of people losing positions down here, and I would have as well in terms of a replication trade. So with oil, probably would have lost one trade here. No problems. That's how it is. You don't win every single one. But now that we're starting to see a bit of a turn in the direction that you kind of already were thinking, that could be a strong sign that actually it is going to go in that direction. Oil is the most confusing though. It's very political. And of course, this year is one of the hardest at the end of this year around US election to trade. Pretty easy during 2024, difficult over the last kind of 3 or 4 weeks. Let's move over to Tesla, 340 being a big key level we thought, but it was actually 350 for the call wall, but we're still holding above 330. Overall, you could see this only really as bullish. It's not really a bearish kind of signal yet. The drop from the top to the low is around 13. That doesn't really trigger anything I've got in terms of concerns. So really, Tesla continues to be, hodl it, buy it, whatever, until, realistically, unless Trump and Elon fall out, it's going to be okay, you would have to think. Semiconductors dropping down to the major supports. No real moves here on semis. A lot of people asking about, what do you think about semis? What do you think about NVDA? Well, what I think about it is we're going to have to wait for earnings. So earnings is the big one here, and obviously we'll cover that in detail because we are about to see it. And when we do get these earnings, we're going to know this is going to push the markets around. Now, upgrades are very important, but we'll talk about this very, very soon indeed. Of course, it's only a few days away. US 2K down near the 61.8, daily 20. This is kind of the level we wanted to see buyers at. No strong bids here in the US 2K just yet, so we'll update when that does happen. And of course, the NASDAQ getting a bid off the 61.8 fib. We do love the golden pocket. It's pretty solid. And this is not bad, but as we already seen, some of the other market sectors seem to be finding better buys. The silver, the golds, and even some of the other sectors doing better than you would suspect. NASDAQ, though, right around the level. Even if it drops a little bit more, look at the S&P 500. That 58.20, 58.30 put wall is going to be a real deal if we do ever go down there. But you're only splitting hairs at this point, like 1% or something. It's not that much in terms of a drop. What about Bitcoin? Still looks like it's digesting the move. I still think downside is potentially to 80. Not saying it's going to go there. Of course, we think it's going to 120, 130 over the next year. However, it's definitely got this possibility. That's just the way crypto rolls. And Ethereum still kind of looking more negative than positive on a chart at this stage after hitting our first TP zone. The good news for Ethereum, flows in. Obviously, we saw that already showing moves. Now we're kind of pulling back, but those flows in, I think, mark the beginning, of course, of a crypto season, which tends to last for a while, and we'll see it go through the alts and everything else. If you want to follow along and keep checking out the latest things on the markets, make sure to subscribe. Make sure to check the alert box as well. And of course, guys, the news this week, not that much. It's really about NVIDIA earnings. And of course, we also will be looking at some of the news coming out in terms of PMIs around the world. That's on Friday, November 22. If you enjoy what we do and you want to support it a little bit more, follow us over on X, and also check out our Black Friday sale. If you want to learn more about how to replicate these trades and really start to fish for yourself. Remember, trading is not easy, neither is investing, but when you start to replicate things and you start to understand that all these markets are connected, it can become easier. And more importantly, it makes more sense. Less stress, better results. Bye for now. Ciao.